They are not informal. They're not informal. They're not selling.
They go give. I don't. No. The thing is, when you he has it because the day he did it, it was paid staff, and they sent that.
I did delete it too.
He did now carry out. Okay. So you. And so some people yesterday I had to quarrel with Mr. William, the head of IT, that people are saying that they will be responding. They have been sending messages to you, you are not responding. So let's just see this new week. I think a lot of people will get their registration.
I will send him
a reminder. Okay, so we are still in. This is one of the compulsory courses that you need to. In short, this is the first course you will write if you're writing. So, it's okay, please. One class. So we are still on evolution, management, and regulation of microfinancing, and like I already mentioned, where we are, the microfinance space will keep on evolving. We had people who were doing the traditional way. It evolved over the years, and microfinance is dated back to more than 100 years. So it's not something that we're just starting, just that it is evolving. And I think we're in the best of time because technology have also made it very, very reliable for people to say, oh, I work in a microfinance bank. I can tell you, if there were no technologies, people would doubt microfinance. Even with technology, you see some few doubts. I'm telling you, but technology has helped microfinance to stand side by side with the commercial banks. And many of the commercial banks today are coming into the microfinance space because there's more money here than the commercial bank. Yes. They have. No, apart from Sharp, they have FCMB Microfinance Bank. First Bank, and I didn't sell the Leshego. So that's the thing. So many of them are coming. So Leshego, it was First Bank Microfinance Bank. So they still have some stake in Leshego. So they were the one that sold it. It was First Bank Microfinance Bank. So okay, let's get to next slide. I've got to see whether I can finish it in 45 minutes. Let's do the live exam and see. We begin to just maybe 30 minutes. Let's see the first 40 questions, and whichever whether you got it right, you will know. Because the exam is the main thing. So, like we already mentioned, that microfinance refers to financial services that get at low income individual. We already mentioned this. We are dealing with the low people, we are looking with the active poor and the household who are excluded. Most of them don't have bank account. Those are the people we are trying to bring into the financial system. And what we do, we provide them with loans, savings, insurance, we do transfers. So these are something that relates to what we're doing in the bank. And we decide to meet their needs. That's why you see microfinance have solved most of the problems that we thought we had. Next slide. So what's the objective? Poverty reduction, economic empowerment. If you give someone loan, you are empowering that person. That is what microfinance is all about. And that is why I love to be part of it, because it helps you to see that somebody that started with me 10 years ago, and I'm saying the big guy, that person will never forget the bank. So financial inclusion, that's what we're talking about. Gender equality. Can tell you a lot of women, like Professor Yunus, the father of modern microfinance, went to start this in Bangladesh. And because you can't talk with women then in Bangladesh. So he had to, he was a PhD student. He had to now get other women and said, okay, if I advance you this money, let's begin to see some improvement. And that was how we started microfinance. And a gap between the gender, they started going to the financial sector. Before now, if a woman says, I want to collect loan, you look at the woman, nothing happens. But no, those kind of things does not happen again. A woman can actually walk in and say, I need facility. I was in Germany this week. The lady walked up, he has a factory in pure water business. He came and he said, I can tell you, if you do business with my company, our company, you will not regret. And I'm like, I love the boldness. That means that women no longer, they are not playing second fiddle any longer. That's the gender equality we're talking about. So the microfinance equip their clients to improve their livelihood. If you see somebody before now was playing, maybe you face me, I face you, and begin to now live in a one bedroom or self-contained, and you're seeing that that person is living better, and you see that there's so much investment you're seeing in the business. The business has grown from one shop to two shops. You will see that that's one of the objectives of microfinance. Next slide. So the principles of microfinance. Anywhere you go in the world, it's going to be the same. It is client driven. Any product we design as a bank today that is not client driven, notice that they will not, that product will not sell. That product will not do better in the market. So it must be the client. Every product we have designed as a bank will always go back to the client and say, and so, or maybe in form of their feedbacks. If you want to use our agri loan, then I said, no, before now, the bank was scared of agri loan. But you notice that when the customer started saying that, okay, can we do moratorium of 3 months? We cannot pay monthly. We listened to them and came up with a solution for them that has made those customers happy. So microfinance is client driven. Sustainability is critical. As a bank, as a branch, you must cover your cost. Your cost, if you're not sustainable, if a condo was not sustainable, 28 years will not have been paid. So the bank is sustainable. So it's critical because if the bank is sustainable, we're able to recruit new staff, you do more loans to expansion. So sustainability is very important. And also empowerment. If you see the slogan of the condo is empowering for microfinance. So that empowerment is one of the principles of, and you see they said especially women, build social capital through group lending and community. So everybody have their approach. You can do it through group lending, you can do it through individual lending. But the principles are the same. Next slide. So we now talk about the evolution. So you can see it here that from where we now started hearing microfinance is they had to reference Professor Muhammad Yunus and the Grameen Bank that he founded in Bangladesh. That is where the modern evolution of microfinance started, not that it did not exist before. So that their focus was on loan without collaterals. That same year too, that same period between 1970s, ASEAN also came up. So you can see that ASEAN International have been expanded beyond the Latin America, even into Africa now. We have ASEAN Microfinance in Nigeria. We have it in Ghana. So the same ASEAN also expanded into Latin America, focusing on the urban poor. You see, they like the same 25%. One Yunus started with rural people. ASEAN noticed that people in Latin America, though they were living in the urban cities, they were poor then. So they started their own in urban poor communities. Yes, like now, Calabar is an urban city. But there are some places within Calabar that you have poor people around it. So you notice that they focus more on the urban poor. Then also found riots in Indonesia also found a large scale rural microfinance. They no, we will not be in the city. We'll go to urban. That would be our target market. So today, microfinance is practiced worldwide, not just in Nigeria. Everywhere in the world, they have sent over 200 million people clients supported by global donors. And one of the things we are seeing in the microfinance space as of today is that we have a lot of global donors, investors, and fintech innovation. We noticed that, recently, Google got into money point because they have seen something there. So they are bringing the technology, they are bringing their money to support. So it's a viable industry. So you can see how we started and where we are. And I can tell you in the next 10 years, you will see that microfinance will have evolved beyond what we are seeing today. Next slide. Next slide. So in Nigeria, we've already mentioned the global scene. Now in Nigeria, everybody here knows of Esusu, Ojo, Adashe, people doing contribution. So he has a school in Nigeria. I can tell you, even get back to when we are talking about Muhammad Yunus. So in the 80s and 90s, we started seeing NGO MFI. NGO MFI talks about a non-governmental organization, microfinance institution, like LAPO. They started that same period. O1 started that same period. FADO started that same period. TEC started that same period. And also in the 90s too, 1992, CIBN launched a policy on community bank, which you can see that Econo also came in that period. People don't have the wish of being one of the commercial banks that started in the 90s. So 2005, CIBN introduced a policy, got a policy for microfinance bank to strengthen the sector because they noticed that, one, what the community bank were doing was not sustainable. And sustainability is critical, like we already mentioned. So they now came up with a robust plan to start microfinance. And I can tell you, because the microfinance bank, they was the first community bank to transform from a community bank to a microfinance bank. And so that is one reason that the bank has a rich heritage and history when it comes to microfinance. Next slide. So the growth of microfinance by 2016, Nigeria had over 960 licensed MFD and saving over millions with number of clients with deposits, with billions in deposit and loans. Microfinance remains a critical pillar of the financial institution. As I speak to you today, this number have also gone down because some license will be revoked. So, and I mentioned in the other class, I mentioned the number that we still have. For people who have notes, they are notes. State, and we mentioned that we have 8 national MFBs in Nigeria. 8 national MFBs. We have over 200 MFBs, and the other ones are the unit MFBs. So, meaning that averagely, we have more microfinance bank in the southern part of Nigeria than the northern part of Nigeria. And I also explained that partly why you don't have most microfinance there, because one, there's insecurity in the north. 2, we also have the religious beliefs that no, you cannot give loan and collect interest. And as we go, we also see that we have to now introduce their own kind of bank then that will accommodate their needs. Next slide. So our clients, they're the traders. They are the smallholders, farmers, they are artisans, they are market women, and micro entrepreneurs. And most of them lack access to the traditional banks due to collateral, because the commercial banks, if you need some big loans, they don't know your collateral. So the attention to are focused on less documentation. So microfinance enables this group to access credit, grow their businesses, smooth concerns, and invest in education and healthcare. So these are our clients. So any microfinance bank that will do better has to target this, and you can now add some medical service. So many microfinance banks today, they have, apart from giving growth, they also talk about investment in education. They have educational solution, like now, back to school products can suit this, and also health pay. Maybe you sign up with an HMO that can also take care of the health of your customer, because if your customer is healthy, you're able to pay your loan, business will also be sustainable. Next slide. Then, element of microfinance. We talked about no. You can actually get that done. It's a service. It's a service. It's a service. No. It's a service. The thing is, you don't bring them together and get. You still make your money. Yes, now they pay and you expand their service. So, elements of microfinance include credits, include savings, insurance. We already mentioned the loans are actually small, but the small does not mean that it's 1 naira. As the level of the bank, we still give some good money. So, but when you compare to the commercial bank, it's far less, far small. So, insurance, and I can tell you, I noticed that remittances now. Microfinance are not allowed to do remittance outside. You cannot transfer money abroad here. But recently, Money Point got an innovation, have the Money Point wall. Money Point wall that somebody can actually send money from the UK to your Money Point and you receive. And they said for every money you receive, they give you a bonus. So they are really trying to do remittances. So you mean that there's nothing impossible. All these things that all the CIBN are saying, later on, if they see that you are putting enough capacity, they will allow you to do it. So the economics in microfinance, we talk about the supply, the demand, and sustainability. So we need to understand that interest rate acts to cover high transactional costs while remaining affordable. You cannot go and say, I want to charge 1%, so that you will attract a customer. You will lose the business. So, okay, I work with Walter, the lady that we tried to market, and we went to see. I said, no, Sterling Bank gave me 2.5. I hope I have a million woman. And I tried to explain to her that you cannot compare our high transactional cost. The person in Sterling Bank that came to you gave you a 10 million without anything. We need to have more than maybe 10 to 15 customers to have 10 million naira. The costs are not the same. 2, 10 million naira to Sterling Bank is no money. But to us, it's a big deal. So if we don't have enough of those interests to cover our costs, it will not be sustainable. But at the same time, it must be affordable. So financing the poor, microfinance stimulates entrepreneurship. And this is one of the things that I will tell you we must give it to microfinance. Nobody knew a lot of people in these markets until the microfinance came in. All these customers we are built up. They are sitting and commenting about going after them. Microfinance has stimulated entrepreneurship. Somebody don't believe that if I have a small business, I can go and get money. It has also helped to increase productivity and reduce inequality. If a woman has money, cannot wait for a man. Cannot. He can sort his own self. So it helps to reduce inequality. Next slide. So the business mentorship and social enterprise. Many microfinance models provide training alongside loans. You need to know that. That's why when a customer comes to you, say, Madam, you understand this business. You begin to tell the customer what he needs to know about the business, because you are also, that is what makes microfinance different from the commercial bank, because they see it as both business and social. So microfinance operates as a social enterprise, balancing poverty reduction and institutional sustainability. In as much as we want people to leave the poverty space, the bank must be sustainable. So poverty reduction must go side by side with the sustainability. So this is one of the things that you need to know. You don't need to say, oh no, just pity our customer. You can get, oh, let's just reduce money for them. Also think of the sustainability of the bank. You're working for next slide. So need for regulation. All these things, because you're going to get deposit from people. Also, they believe that it should be an ethical organization. CIBN came in to say no. For us to achieve financial stability, protect depositors' funds, prevent fraud, and support growth of microfinance institutions, there's need for regulation. So that is when CIBN started to say no. We have to put this in place. We must regulate the microfinance bank. Next slide. So this is when the policy came in 2005. And there's nowhere in the exam, this thing will always be out. These policies, when the policy started and when there was a revise of that policy. So the policy formalized the microfinance in Nigeria, having license and capitalization, governance requirement. These things are there. These things are there. As a bank, we observe always. Next slide. So the revision came in 2011 to see that something went wrong. How would you say that a unit MFB, you have only 20 million? There's no way we will survive. State MFB, 100 million. The capital would have been eroded. And now we introduce the new guideline, the new capital requirement, and emphasize financial inclusion. Next slide. So the licensing of microfinance bank, there are 3 stages. Everybody knows here. The unit, the state, and the national. And each require different minimum capital threshold. Next slide. So for the prudential guideline, covers loan classification, provisioning, risk management, and liquidity requirement. This institution remains solvent, transparent, and accountable to regulators and clients. I believe that when Pastor Pollard took people, he had mentioned the provisioning. I've already mentioned in the last class, your loan classification. I have already shared some with Michelle. So you added. Yes. No. That's the revision. It was in 2011. The 1 billion, the other national got to 5 billion. So that's where, then I have also said that provincial guideline. There's no revision yet. There's no. We are expecting that after the commercial bank. Is it national is like 5 billion? 5 billion. 5 billion. Yes. So what happened with that? No. Okay. When did it was no. Before we even got, before now, that was that's 2 billion. Yes. And so before then, that other one came, and which I have said the potential guidelines to set. You will say, but everybody have to keep their listening because CBN CEO, when you are reporting, when they come, they measure you on what they told you. So it's in place. It's in place. Whether anything now, the CBN governor come now and make a statement, you need to see the policies. So that's the thing. So next slide. Also, the NDIC talk of the tax scale. No, the thing is this. When the assets of those companies is shown, people who have those money will be refunded. But they have, no, it's true. The people they take care of is the one that they said from 2 million below 500.
Yes. So what's about selling those assets?
So
if I have 1 billion now,
no. Let me tell you something. No, the truth of the you see, some of these things are political dimension, which we also try to run away from. Change of Gota had money in Society General. I was owned by that city 7 guys that went to Heritage. When that thing happened, that's huge money. The government gave it down. So they gave it. They gave me how we did. His name, the money was not trapped. So there are some. That's why you see there are some banks that you see, even when you see that this bank should even be liquidated and see that. So that political dimension. But our main focus is on why do we want NDIC? Because it's a safety. If I'm telling you there's no NDIC, people will not put money in the bank. Their deposit are not safe. No. See, the truth of those things. If your own side, you're also doing your own side well, NDIC cannot catch up. That's the truth. So it boils down to how you manage your organization.
We're not talking about the.
We're
talking about the.
As a customer.
I don't understand. There's no 15 million I want to send to China. I woke up tomorrow. You say,
no, the truth no, see, that is
wait for NDIC. NDIC come and tell me, Organa, 5 million. 15 million on the flight and go. I will put that on my blower.
No, see, the truth of all things is that's why when we have where we talk about financial literacy. That is why it's good. You try to know what is happening in your economy. Whether you are a layman, you would have heard something that something is not going on well, for you to quickly and not take your money off. You have seen signs.
Some of those reasons
I understand. And the thing is this. It is insurance company for the banks. Now I understand their point. So that's as an insurance company. If let's say you insure your car and the kidnappers they carry your fire. Fire. The insurance company will come and say, "You fire." They will say. So let's say you don't see your car again. Insurance company cannot buy it. They cannot. They can't buy it. They cannot. It's not covered. The policy does not cover. It's like now. See, debt now. like now they say popular. They must see that there was a forceful opening of this door, and they must see those things. But if like now, this door, sorry, is closed, and nobody, some people can get in. This door was open.
I don't break the door.
And
People will find it, I don't break the door.
no. And when they have no, the two of them that they have experts in that area that know. So when they come, they see this house, nothing, no door was this thing. Then they leave and they okay.
Okay, go match that, sir.
And so every you
The condition
must be, for instance,
that's why I said
outside.
no. The thing is, that's why I said let's leave this because I can tell you, insurance, there's no way you work with a bank without getting NDIC.
No.
And as a customer too, that is why you must diversify your funds. You understand? Diversify your funds so that, like now, okay, do you feel that Dangote put all the investment in one? No. Why is it putting all this in? Because tomorrow, if anything should happen here, I'm safe. So that is why you will see. Next slide. Next slide. So now, okay, so these are the relevant laws. Acts. Both here, you will see. CIBN Act, NDIC Act, KAMA. I already mentioned that KAMA is for CSC. All those, these are the people that regulate how banks get licensed. Before you even go to CSC to register any bank in Nigeria, CBN would have given you a kind of letter to say, okay, you are the one, I will send you the book, you can go to CSC to register. Also, the CBN EFCC Act, the Money Laundering Act guidelines, which I already mentioned here, are already people, they are working. There's no way we have control people here. Even the front and back, all this report they have been sending to CBN. So it's a way to make sure that there are so many checks. A lot of people don't want to invest in the bank because they are over-regulated. So you can bring money in this financial system to understand. You want to know the source of the funds. Expose people. So these are some of the things that they deal with. Next one. So, like now, the umbrella bodies. Apart from the other people who are regulating us, we also have the NAM. We've been seeing them when we did our watch program. So the leadership came. So they represent as the operator and the source of regulations. There are some complaints on other MFP that NAM can go, either the MPs of those banks say, no, let's settle this thing. We don't know. Then we also have AMPID. AMPID is for the MFIs, and the FIIN are people who are into research, try to see how we can bring about financial inclusion, quality support, and industry development. Next slide. Okay, so now there are also global best practices, which we also need to know that the international bodies are more concerned about sustainability. Before a global donor will give you money, they will check whether you are sustainable. Two, are you transparent? Like, are your books clean? Are your books open? Can they see transparency in your accounting records and everything about the microfinance? So, client protection and alignment with financial inclusion, they are also concerned the impact it has on those customers you're also dealing with. So that's where the global best practice is coming. Next slide. So financial education. This is where you should pay more attention. That this is where you are talking about intermediate customer. I can tell you for free that they know financial education more than some of us. They know. They know. They know. Go and check this people that lost money in education. You will check, you will not see trade as much. Because they don't have money to even put in the bank. They don't have. Because we can't people. I want to do fixed records. So some of those things. So, yes. So you see, so those are some of those things. So financial education is very, very important. That you empower your client to manage money responsibly. It's very important. Avoid over-indebtedness. That's why credit checks is good. So, you have credit in like 4 banks. You should not give him money. No, civil servant. No, it's not civil servant. No. It's not. We are talking about. No, we are not talking about civil servant. They know. They know. They are appetite to collect money. It's not. It's not. It's not.
But they are right to collect.
They know.
They know. They know. They know.
They have a league. Even for them, it's better to get to what. If my salary is 100,000, have a league.
But over time, if they consistently collect over that, you'll be more indebted. Why am I saying that? If you were charging 10%. No. If next month you collect another one, 10%. No, they are consistently coming.
They're giving him that 300,000 for 6 months.
That's what I'm saying. So that's what you earn. You earn.
10%. The other one is 10%.
We make more money. So that's what I'm telling you that this financial education is the one we share with the customers. Let them know that they can plan for their future. That's where investment comes. That's where savings coming. You can actually have an account that will save money for the rainy days. It's not every day that you come and ask for it. And some of them will begin to see that when they are retired and they come, we cannot do that again for them. You are doing it work also. So you are limited in the money you collect. So if you have planned for the future, it will not, what you will have will be sufficient. So educated clients are more likely to pay your loan, and that's the truth. I had mentioned here that we had a customer that said, "Oh, I pray every day that nobody will knock my door to collect me. I collect, you will be paying some what I need." Those are customers. Those are customers that already are. They have this financial literacy. That no, don't go beyond this budget. This is what the business can pay. And use financial services effectively. They don't give you problem. You will be happy doing business with them when you have financial people that can pay. Oh, you know. No, yes. No, you punch your calculator. See, you punch your calculator and said, okay, I needed 30 million. But my calculation shows that with 30 million, I will struggle. Yes. And you say, no, give me 15 million. Let it be an acceptable thing that I can also have peace. That is financial education. Next slide. So, financial exclusion. This one, we can say, see, the major, and that's why education is very important. Financial exclusion in Nigeria, they said the number 1 is poverty. Number 2 is illiteracy. And I can tell you that if people are more educated, you will have less poverty level. That is why in the north, the poverty index is higher than in the south. Because you see, averagely, and I also believe that one day in Nigeria, we'll get to a level that we say that before somebody could go to lane trade, let that person have SS. I had one of my lecturers that told us that in Ghana, we cannot live even organizing without SSC. That check most of the Bangladesh companies, they bring people from Ghana. Because most of their technical skills that they need in the technical education, they are using it. So, literacy is very important. Somebody who is be cheated. So, that poverty, this thing that is that one. If somebody does not know, he wants to say that I've raised my child, this is why I stop. It's also where you stop. You will not go to school. You don't need to follow and serve. That poverty multiplies. So also lack of identity documentation. I'm seeing a lot of improvement in that. Also NIA now, there are BBNs, so high cost and poor infrastructure. That's why I said that this figure have improved. As at that time it was 80% of Nigerians will remain excluded. And the report by EFIN said that 41.6. So it means that the figure are getting better. And I can tell you that we might be either 50 or more less than of this figure. Next slide. So strategy for inclusion, that's where agency banks came in. That's part of the revision of the 2011 that we now have agency bank. So that, I cannot go to bank. Somebody should be in your community, serving you, open an account for you. They now simplify KYC. We have mobile money. We have rural outreach. Fintech came in. And this is also where we have the non-interest banking. That's Islamic banking also came in that period. And we also see partnership with telecom to drive innovation. And I can tell you, if the telecom guys want to float microfinance, they'll do better than any bank. Check how much people borrow money from all the telecom. Their percentage is very high. And every day, I don't have data, you borrow. I don't have airtime, you borrow. So they are also a part of the inclusion. You see that even people now, they reduce. Before now, some people borrow airtime, they don't use that SIM again. You see that thing has reduced. So people are beginning to see that every time you collect, you buy SIM and you don't buy airtime, does it make you responsible? No. So we see a lot of financial
document. Go to get address. The pay you. This name is going 1, 2, 3, 4. So you have to clear.
So I noticed that it has reduced.
Introduction of NIA. The rule of the call to the person of my we show you how many lines of everything that this one is going, this one is going, this one is going, this one.
So those are the things. You see, that's why inclusion is good. Because most of these things you have a safer country. Most of the reason why we have more around, because some of those places they make sure that we don't have this telecom access. So no documentation. So anybody can really say, so they can kill someone and take somebody's SIM and use. Next slide. So international benchmark, we're already saying that the Bangladesh Grameen model shows how microfinance can scale globally and empower women. We also have M-Pesa. Kenya is one of the most successful in terms of microfinance. And this M-Pesa, they do mobile money. A lot of countries across the world go to Kenya to study them mobile. So these are benchmarks that I believe that other Very soon, I can also tell you that Nigeria also have some of this benchmark. Lapo about to say another benchmark. We have monitor and check other benchmark. So as they begin to see as a model, they also copy. They said, oh, these are the benchmark. Next slide. So the role of HR management in MFI, recruitment, training, motivation, retention of competent staff, yes, staff quality that affect client and institutional success.
Next slide.
We have already well known.
We want to talk about this one.
Next slide. So recruitment and training, they recruit staff with local knowledge. That's one of the major things we say. Any staff you are employing in Cross River have a vast knowledge of the state and provide continuous training to improve their skill and customer service. And one of the things I want to add is that these ones are trainable. You can train somebody to get better in skills and competence, but when it has to do with attitude development. So you must hire people with the right attitude. Next slide. So succession planning, the bank has its own leadership development and succession plan to ensure long-term sustainability. We have it in place. Next slide. Next slide. So manpower planning and development. So there must always be, people must be guaranteed adequate staffing level across the branches. Develop programs that will prepare staff for future challenges. We must have it. What we're doing today is also that manpower planning and development. To prepare you, if you have MCP, means that you are also knowledgeable enough about the business you're doing. Next slide. Okay, so business strategy. Even as a bank, you are adopted. Our strategy focus on outreach. That's why you see we try to do branches. We're trying to we're innovating. We're also trying to make sure that we are financially sustainable and also rural penetration. And I mentioned that if people in the rural areas are doing well, they will not come to Calabar. If people are doing well in Cross River State, nobody will go to Lagos. Rural penetration. That is why we have branches as far as Ogunbra. Is so that the people at the rural area will also have the praise in the same present. If somebody will have a mobile app and can transfer money, why would we pay transport to come to head office with them? Next slide. So the vision, the mission, and the core value. The bank has its own core value. We have vision. We have our values, what directs and inspire our stakeholders. This is what we already know. Next slide. So balance sheet, scorecard, and rural planning. So we talked about that. This balance sheet, and it's one of the questions they will ask in the exam. The performance must be, you must make profit. The client too must be satisfied. Then the internal processes must be simpler for somebody that wants to come in. And also your learning dimension. So rural planning adapt strategy for underserved community, because in these communities they need these things. Next slide. So management function. So key function include planning, organizing, staffing, leading, and controlling. Managers to ensure their branches and MFPs remain efficient and customer focused. And it's one of the principles, it must be customer focused. Anything you're doing must be the focus of the customer, must enjoy benefit, must derive benefit. Without that, it's not giving them a sense. Next slide. So emotional intelligence and style. We talked about emotional intelligence as a leader. as a branch manager, you must have empathy. Empathy is different from sympathy. It must be participating leadership. You don't tell your staff to do something that you know that you cannot do. You must also participate in whatever you are doing. That will help to inspire your staff and build trust. It will also help to also build client trust. If your customer will have to bypass you to call another person, something is wrong. If your customer, instead of calling you, call another person, that person does not trust. So, as managers, we should exhibit in emotional intelligence, empathy, and decision to inspire staff and build client trust. Next slide. So, business improvement. Every day, that's where this is where they made a solution coming by evolving. Now, we are using digital solutions. Before now, there was no digital solution. Now we have the mobile app, and we're already having to do automation on some of our lead, our expense process automation to improve efficiency, reduce costs, and enhance outreach. These are the things that business must continually do. Even as a bank, we must continually improve if we want to be the market leader. Next slide. Yeah? So I think with that, I will come to the end of this class. So